Alright, for this video I want to go over the IRS Form 5695, which is the Residential Energy Credit Form, and we're working through the 2022 tax year. So in this one, I want to cover solar electric property costs. So when we think of this, we think of solar panels, right? So these are solar panel systems. So we're going to go through the form. I do have one slide here that covers some of the background rules, some really key important points I want to cover. And then lastly, we're going to address the situation in our fact pattern here where we have a credit carryover, right? So just some high-level background on this credit. So there's really two types of residential energy credits when we're working through this form. So our part one of the form covers the residential clean energy credit, and then part two is energy efficient home improvements. So what we're working with here is residential clean energy credit in section 25 cap D. So that's the section of the Internal Revenue Code. And specifically, we're looking at 25D A1. And these are qualified solar electric property expenditures. So what are these, right? Well, the tax code defines these as expenditures for property that use solar energy to generate electricity, right? And these systems have to be used for a dwelling unit, right? So it's a residence. It has to be inside the United States, and it's a residence used by the taxpayer that's claiming the credit, okay? Now, what's interesting about this credit versus some of the other ones is it doesn't have to be your principal residence, right? It just has to be a residence. And so we'll talk a little bit about this later, but most times it's taxpayers installing it in their main home. But if you have a vacation property, you can install it there as well. Now, what kind of costs are included in this credit? So the costs that are included within the solar credit are obviously all the system components, the solar panels, any materials, other supplies, and the labor to install the system. Now, this paragraph here, I've highlighted an issue that was raised with the battery, right? So in this private letter ruling reference here, what happened was the taxpayer had a battery installed with the system, which is common, but they weren't sure whether it would qualify for the credit. They thought they might have had to pull that piece out and not get a tax credit for the battery component, right? And so the argument here was, well, the battery, what if it's dual use and that it's charged by the solar panels? Sure, that's fine, that's great, but it's also connected to the grid. And so if the battery is also connected to the grid, then does it really qualify because it's not a solar electric piece of property, right? Now, in this PLR, the IRS argued that, well, you get the tax credit for the battery component because the battery is only being charged by the solar panels, right? And so the IRS argued that, well, it was the intent of Congress to put in this limitation that the battery component would only qualify if 100% of the charge of the battery was from the solar power. And they distinguished this from a separate energy credit, the solar water heating tax credit. So this credit in 25D A2, in this credit, when we read the language there, it says that, okay, you'll get a credit for the whole system as long as the system is at least 50% powered by the sun, which means that you can have solar water heating systems that are powered by the sun, but then it's also connected to the grid as well, kind of like a backup. They said that was okay as long as it was at least 50% powered by the sun. With these types of systems, the solar electric property, so the solar panel system, the battery, they're saying, well, under those circumstances, the IRS's position, it's got to all be powered by solar, right? So you can't connect the battery to the grid and also charge the battery with just, the grid itself. That won't be allowed. Now, it's just a PLR, right? So it's not tax law per se. But it does kind of give us an indication as how the IRS would treat this if you were audited. Now, what kind of property? We touched on this earlier, right? Where can you install these systems? So it has to be made to the taxpayer's residence. It can be either the principal home or a second residence. And the reason why that's an important distinction is because if we look at qualified fuel cell property, that has to be installed in your principal residence, right? There is a limitation on that type of tax credit, but that's not the type of tax credit we're looking at here. We're looking at the solar electric property one, okay? Labor costs, again, they can be included. That's specifically outlined in the tax code. So 25DE1 says, okay, labor allocable to the installation of the system can be included in the cost. And so the big question is always, well, how much of a credit can I get? So Section 25 Cap DG, so that paragraph covers all the applicable percentages, and it breaks them out by year. So for 2022, the total cost, you get a 30% credit for 2022. Now, 30% comes up from the prior years, right? It was 26% for 2021 and 2020. So now it's 30%. And it's going to be 30% for the next decade or so, and then it goes back to 26% for 2033, right? So it's 2023 right now, so 10 years from now. So over the course of 10 years, you get a 30% credit. In 2033, it goes down to 26, and then for 2034, it's 22, and then it expires. Presumably, it's going to be renewed, but yeah, it will expire after 2034. All right, so in our example here, we've got John, taxpayer. He installed a system in his principal residence, right? He lives there, so it qualifies. The entire cost all in was $14,050. And so what we're going to see on John's tax return is when he claims the credit, he's actually not going to get to use the full credit in the current year because it exceeds his tax liability. All right, so let's jump over to the return. So I'm going to look at the 5695 first. So this is the residential energy credit form again. And so the qualified solar property costs are entered on line 1. Right, so on line 1, enter the full costs that are all eligible, so that's the $14,050. And on line 6B here, we have 30% is the amount of the credit. So 30% times $14,050 is $42.15. So that's the amount of credit that John's going to be able to claim here. Now, if you're looking at this video in a future year or in a prior year, maybe the rate's different because, again, remember the rate changes given the tax year you're working with, right? So it's 30% for this year and going forward for the next decade. It could be 26% if you're looking at a prior year. So be very conscious of what year you're trying to claim the credit because the rate could be different. Now, all these other sections we can leave blank, right? So we're not working with qualified fuel cell property, so you don't have to enter the address of the home here because, again, it's not those questions are related to the fuel cell property, not what we're working with. On line 12, credit carry forward from the prior year. So John doesn't have any credit carry forward from prior years, but he will have one for this year. So on line 13, we have the full amount of credit. There's the $42.15. And remember, this is a non-refundable tax credit. Non-refundable means you can get a dollar-for-dollar reduction in your tax, but if your credit goes over your taxes, you don't actually get a check from the IRS. And so that's the issue that John has here. If we look at his tax liability, and I'll jump up to the Form 1040 pages in a second here, but the total taxes that John owes are $3,290, which is less than the amount of credit. So what we see, if we go up to page 2, well, let me start with page 1. So here's John's 1040. We can see he's got his wages, some interest income, capital losses. So his total taxable income is $29,100, and the total tax he owes is $3,290. Now that's the important number to remember, right? $3,290 is the total taxes he owes, but the amount of credit he gets is $42.15. So because the credit exceeds the taxes owed, the actual amount of credit he gets to claim for this year is just equal to the amount of tax. So $3,290, and then the difference, $925, is carried forward to 2023. So when John does his 2023 tax return, he needs to carry forward this $925 amount. Right, and so that's why on page 2, we see here's the taxes, and then we can see the amount from Schedule 3, right, line 8. Schedule 3 is where we report those credits. So on Schedule 3, we have the additional credits and payments. There's his residential energy credit. So the credit is wiping out all of his tax completely, so now his tax is down to 0. But notice here, he doesn't get the excess credit. It's not as if the IRS adds the extra $900 to his tax refund. He does get a refund here for the amount of withholding that was on his W-2 wages. That's fine. But what's really important to remember here is, again, you don't get an actual check from the IRS for any excess. The credit just rolls forward to future tax years. All right, so that covers it for this video. I hope that was helpful. If you have any questions, feel free to leave me a comment below, and I look forward to seeing you on the next video. Thank you.